What's going on, guys? Welcome back to another brand new video, brand new forex educational video. I'm so excited to share this with you guys because I've been doing this for a couple of months now, and it's working so far so good. Okay, and I use this almost daily, right? So it's a mixture of a strategy and an indicator. Actually, it's just a tool, not an indicator, but whatever you want to call it, right? So support and resistance, as in most of my videos, you guys know, if you have watched my forex videos, I use almost every day for support and resistance, right, for forex. And combined with this little tool called Fibonacci, fib retracement on tradingview.com, and if you're using the MetaTrader platform, it's called fib retracement as well. So if you go to the left hand side of the website, or the panel on tradingview.com, you can see not the first, not the second, the third option. And if you click on it, or if you extend it, you'll see fib retracement, right? So if you click on that, now if you click and drag it from a start to an end of whatever you want to market to, or wherever you want to market at, it will give you something like this, right? Now you can draw it in two ways. You can draw it from top to bottom, or you can draw it from bottom to top. And the only difference will be that these numbers will be flipped, starting from 100 or a 1, and then 78.6, 61.8, 50, 38.2, 23.6, right? I'm talking about the opposite of this order right here that you see. Matter of fact, let me just show it to you guys like this. There you go. So if you start from the top till the bottom, you'll see the numbers like this. If you draw from the bottom to the top, you see the numbers like this. It's just the numbers are flipped, okay? Otherwise, it's just the same thing. So Fibonacci is a tool that will help you catch little movements in the market, right? Or little reversals, pullbacks, whatever you want to call it. Now, how do I use support and resistance mixed or combined with the fib retracement? Well, first of all, you want to see where the market is headed. Okay, so for example, the market is going, you can see lower highs, lower lows, lower highs, lower lows. This means that the market is in a downtrend. In a downtrend, you only want to look for sells, and in an uptrend, you only want to look for buys. Now, how do you trade with the trend? This is where support and resistance and Fibonacci come into play. So, as you can see, that this area right here was a really strong support. As you can see, market reversed, finally broke through. Now this area that was acting as a support is now going to be acting as a resistance, right? Now, how do you draw Fibonacci with this to get the perfect entry, right? Well, where the major push started, that's where you want to start. So on the start of this big red candle is where you want to start your Fibonacci. If this had a wick, you will start at the wick. If it has no wick, you start at the body. So starting at the body till the end of the little trend where the market started going back, that's where you want to draw it till, or that's where you want to draw it to. Okay, now how are we going to look? Remember, we're in a downtrend. We are only going to be looking for sells. So let the market come up to this, to retest this broken structure that was previously acting as a support, will be acting as a resistance now. That's confirmation number one. Confirmation number two is we are in a downtrend. Confirmation number three will be our Fibonacci retracement. Now, in a Fibonacci, I always look for two main percentages. These are percentages, by the way, 50%, 61.8%, 78.6%. So my main two percentages are 61.8 and 50%. That's where I look for the market to come up to, give me a big rejection. Rejection is, by the way, this huge wick at the top. So the market will come up and boom, fall. Once I have this confirmation, on 50% or either 61.8, I'm gonna enter right at the close of the rejected candle. Boom, there you go. Now since this is a GBP pair, my stop loss would be up here somewhere. Remember, GBP pairs are gonna be a lot of pips, so be careful. Okay, so just above this previous broken structure, I would say around 20 pips would be my stop loss, and my take profit would be exactly where the market went up from, or where it reversed from. Now this is 64.7 pips on a 0.01 lot, which is the minimum lot size, the least lot size you can invest. This is a $6.5 just in one single trade, and this is happening every single day, so you don't have to worry about missing out on this, right? So for example, let me go ahead and delete all this. So now let's say you missed this pullback, and you missed just this whole thing, right? You missed all of this. So don't worry, since we're in a strong downtrend, the market is going to break this structure as well, where the market was acting as a support. Now it's going to come back and retest, right? Boom. What do? You draw starting on the wick of this strong candle where the downtrend, the major push started the wick. Draw it all the way till the market ended where it's ended its downtrend, and now it's going to come back for the pullback. Now you can see it came back exactly to this broken support. Now it's a resistance. Not only that, let me go ahead and delete this resistance, so you can see clearly it gave you a resistance very close to 61.8, but exactly at 50%. Boom. What am I gonna do? I'm gonna go here at the close of this candle. Now my stop loss is gonna be just above this broken structure, just a little bit. You can say 20 pips again, and I'll make my take profit exactly where the market reversed from. So another 64 pips. How crazy is this? And you want to know something, guys? This is happening on every single pair. Every single pair, guys. So for example, the major push began on this candle. So you draw it till here. Look where the market is giving you these rejections. Okay, you take a trade here, and on the close of this rejected candle, you could have made 38 pips on USD CHF. Now you go to another GBP pair, same thing is happening. Look, market is in an uptrend now because it broke the recent highest highs. It made a new high, made a new higher low. Market is gonna reject. Now market might come back or might not. We'll see how this one goes, but you just do the similar thing in the uptrend. Look at here, guys, 3 opportunities right in front of you. And I mean, if market comes up to 50%, rejects, or 61.8, I can take another trade. This is how simple it is, guys. This is how you catch 40 to 50 pips every single day. Now this is happening on the indices as well. Look at this. Look at this, guys, on the indices. So let's say the push started on this red candle, ended here, came back to 38.2, not really came back to 50%, just because the sellers are so in control of the market. The down trend or the selling momentum is really, really high and really strong. That's why the market is not going to come up. Now we're going to mark this one. Let's say the market comes up to 50, which is recently broken support. How perfect, guys. Look at how perfect this setup is. Comes back, combined with support and resistance and my fib retracement, I can take this trade. Same thing on the S&P 500. Look at this. The market came actually here, and now I'm just gonna wait for my 50. There was a broken support at 50. Yes, there was, and on 61.8 as well. So you can see from here till here, this is a support that got broken. Now I'm gonna be looking for sells. This is how simple it is, guys. Same thing on the Nasdaq. As you can see, this downtrend was like this. Okay, the market came up to 50% and boom, just fell in again. Now I'm gonna be looking for another selling opportunity in this area. That's it. That's how you sell. And that's how you buy in an uptrend. Let me see if I can show you guys an uptrend or something on euro pair. Maybe no, there must be. Okay, perfect, this one. Okay, so you can see the market was in an uptrend, making higher highs, then made another high low. It's still in an uptrend because the market is making higher lows. Boom, made a major push to the upside, made a previously broke all the previous highs, made a new high, came back to actually 50 and 61.8 in the middle, right? So let's say you entered on the close of this rejection, you could have made 34 pips, or you could have let the market come to this area, previously visited high, 50 pips. That's how easy it is, guys. I don't know what else to tell you. You're growing your account every single day using this small strategy, which is so powerful and so simple. Even if you're a beginner, you can use this. So that's really it, guys. That's how I look at the markets every single day. That's how I'm trading Fibonacci, support and resistance. I mainly trade support and resistance, but Fibonacci is just a simple and powerful confirmation that I'm using. So that's really it, guys. That's how you catch a small portion of a trend, right? And you want to trade with the trend. Trend is your friend, right? So that's really it, guys. I hope you understood something. I hope you learned something new. I hope this gave you a little bit of that little boost of confidence that you were looking for. Hopefully you can view the markets much more clearer now and much more easily. And yeah, that's it, guys. I really hope you understood something. Please ask me in the comments if you have any comments. Let me know, and please go ahead and follow me on Instagram. It'll be in the first comment, pinned comment in the comment section. And that's it, guys. I'll see you guys in the next video. Peace.